Hi everyone, so today we're going to be looking at adjustments to do with the consolidated statement of profit and loss and understanding how they how they impact our workings. Okay, so we've gone through all the adjustments actually that come up. We looked at how they affect the balance sheet, but we have to understand how those same adjustments affect the statement of profit and loss. Okay, so the first adjustment is where you have intercompany balances. So within the group, one company owes money to another company in the group. Now it's misleading to include those money, so we need to get rid of them. And the correction, as you can see here, is to debit creditors and credit debtors. So in other words, this has no impact on our balance sheet. So you can remove that. Now the ones that do have an impact are the ones where we have to debit retained earnings in some way, because retained earnings ultimately is your accumulated profits. And if it relates to current year, then you're going to have to adjust your statement of profit and loss. So let's look at adjustment 2, where you have a impairment on goodwill. So it's a current year impairment. So your current year impairment is an additional expense. So it's very simple. The current year impairment, goodwill impairment, you add a line for what you're adjusting, and say if it's 11k, you put it underneath the acquirer. So in this case, A is the parent, so I'm going to put the goodwill underneath A. Okay, I'm just going to make a note that A is the parent. So we have our same arrangement where A has 80% of the ownership of B and A has 30% ownership of C. Okay. Now okay, so that's one done. You can cross those off. Adjustment 3 doesn't come up, and it can be quite complicated to explain, so I'm going to leave that. Adjustment 4 though does come up occasionally. So adjustment 4 is where your fair value of of your subsidiary is greater than the carrying amount at acquisition. Okay, what does this mean? So for example, if your fair value of PPE of the sub is greater than its carrying amount of sub, that means depreciation charge is going to be higher. So say depreciation charge post acquisition is 5k, right? Well, you need to do something about that. Now, where does the depreciation charge go? You can put it under admin expenses, depreciation charge. And we put it underneath the sub that we're acquiring. So B is the sub in this case. So I'm going to put it underneath B, and then that's it. Done. So then we've done another one. So as you can see, impact on PP and retained earnings are subsidiaries. So the expense we recognise in the subsidiary. Let's have another one. Intergroup sale of PPE leading to misstatement of carrying amount. So this is where you have an intercompany sale of PPE. So in this case, I have A to B PPE. And you know, A is recognizing a profit, but there's also excess depreciation as well. So what we need to do for this adjustment, as you know, is you debit retained earnings seller. Say if we're going to say 12, let's pick a figure 7k and credit PPE 7k. Now if A is selling to B, so if I put PPE adjustment, we put the 7 underneath A, but if B is selling to A, PPE, and the adjustment is 8k, guess where we put it? We put it underneath the 8k. And then that's it. I'm just going to rob these out now to create myself some more room. So then we have inter-sale group of inventory, which works in a similar way, but we'll cross that bridge once I've just rubbed a few things out, but hopefully rubbing out all my work. So Just making some room. You're hanging in suspense, I can feel it. So if you have A to B and B to A, so the sales, so A sells 12k, 10k here, 12k here, and our perp adjustment is 3k here, our perp adjustment is 4k here. How do we account? What's the issue? What issues? Well, firstly, we're overstating group revenue. By 22k. So it looks like we're making external revenue sales of 22k through recording these. We're also overstating group cost of sales by 22k. Now this doesn't have an impact on our net profit figures, but it does impact the presentation of the statement. It looks like you've over-recorded revenue and you've over-recorded cost of sales. So in this case, it's a very simple adjustment. We just do less 22k here and less 22k here, and that's us done. What about perp adjustments? Well, I'm just going to put a perp adjustment underneath cost of sales. I don't think you lose marks where you allocate it, but maybe check the mark schemes when you do these questions. But the important thing is you allocate it to the correct company. So who's making the profit? Who's benefiting from the sale? It's A. So your 3k goes to A. For example, for the 3k, we put it to A. For B to A, where the perp adjustment is 4k, we put the 4k to B. So do you see, you're allocating it to the correct entity. Okay, so that's us done with intergroup sale of inventory. We already know how to do perp because I already made a video on it. So hopefully that would be enough. Now this time, we're going to change things up a bit. And I'm going to, instead of having A to C, I'm going to have C to A. A to C and C to A, okay? And I'm just going to rub this out to give myself some more space to breathe. Okay, so C in this group is an associate. A has 30% shareholding in C. I'm just going to add, just to highlight a point, I'm going to add share of profit from associate. I'm just going to rub out a few things. I'm going to rub out these things because we understand the point. And I'm just going to put share of profit from associate. I'm going to pluck out a figure out of thin air of 30. And we're going to understand how the adjustments affect our figures. Now, what you need to remember is that C is not part of the group. C is an associate, it's outside of the group. So we don't need to deduct 10k and 12k from revenue and cost of sales. But we do need to make an adjustment for the 3k and 4k because, we're already recognizing a share of profit from the associate. I've added a figure of 30 just to highlight the point. Now, where you allocate, let's see the double entries. So where, for example, the group is selling to the associate, that would be A to C. We debit retained earnings of the seller and credit investment in associate. Watch my other videos to understand why. We basically credit investment in associate because we can't credit inventory because the associate's inventory is not on the balance sheet. But as before, we debit retained earnings of the seller, and the seller is A. So where do we put the 3k? We put it as an additional adjustment in the 3k in the 3 column. You can put it under cost of sales or you can put it under admin expenses, I think. And people generally put it under admin expenses for perps. So that's us done. What about C to A? Okay, so C is making the sale. What have we said that we need to do? What do we need to do? Well, we debit the share of profit from associates, okay, which ultimately feeds into the retained earnings of the parent, and credit inventory, okay? So the 4k feeds into our profits from associate line. So then in our total, we're getting 26 for our share of profit from associates. Okay, so those are the main adjustments. You might come across more, but just remember who is making the sale. You adjust that column. Make sure you're allocating your adjustments to the correct column. Now, the only other point that I wanted to make was on acquisition dates. So you've probably seen in my previous examples that acquisitions can happen partway through the year. And as you know, we only care about movement, transactions post-acquisition. So we only care about, for example, for B, which was acquired on 1st of July 21, we only care about the sale or the movements between 1st of July 21 and 31st December 21 when the entity was part of the group. And that represents half a year. Okay, so above B, I put my half, and I'm just going to use a different column. This 300, I've recorded all of the revenue, should become 150. This cost of sales should become 75. And this admin expenses should become 35. Okay, so just make sure you put the half next to B, because you're telling the examiner I've prorated all the figures. Okay, so that's what I wanted to explain, and then obviously you total the columns in the end. So 250 minus 22 is 228, I think. 175, 197, 197, 203, 207, etc., etc. Right, so you do your final totals column. So these figures, you can either combine cost of sales with perp, or you combine, what I normally see is admin expenses and perp combined. So instead of 2707, this should be 197. Okay, let me just rub that out. And then 3 plus 3 is 6, 6 plus 4 is 10, 110, 145. I know I robbed some out, but I'm just explaining that you'd obviously add in the goodwill that I robbed out and all those other things, but I think I've showed the main points of what you need to do. Thanks everybody, hope that was useful. Cheers, bye.